Good morning, everyone. Welcome back to the RationalInvestor.com's Daily Brief for Humanity. It's TGIF and all that. Looks like we're live on YouTube, so good to see. Right, yeah, okay, so that's rocking and rolling. So anyway, good morning, everybody. Looks like we got a pretty full lounge here this morning in the Hangout, so nice to see everybody. It's Friday, so actually I think it might be a good idea for us to just sort of make it a habit that Fridays maybe we just sort of focus on your requests. If the bear is around and he's scheduled for a session, then by all means we'll have him on, but we generally have Fridays open. So I've asked Alex, unfortunately, Brian, when he gets going, he just rambles on, and the hour can pass really quickly. We do have a level 2 class today, so I do have to sort of stay on schedule. So we'll probably try and limit this to around an hour, and Alex got us started right on time, so I appreciate that. Thank you, Alex. And speaking of which, we should probably touch base with him. How you doing this morning, sir?
Hey, Brian. Hey, all. Can't complain. How are you, sir?
Good, good. It sounds like you're working through that cold, so hope you're feeling a little better.
Yeah.
It's the 1st of March. Of course, if you are Canadian, I'm not quite sure how the Americans work with their contribution to their retirement plan deadlines, but Canadians, today is the last day to do your RSP contribution, so you better get off your butts. And to that end, Will actually asked if we could get an RSP group meeting going. And so we're going to try and do that this evening. So, Will, if you could, when you're ready to rock and roll this afternoon, this evening, if you want to sort of poke me on the site, I'll wait for your cue, okay? The Americans, I guess, Will, you're American? Okay, so I guess RSP isn't quite relevant for you. But Grim is also saying it looks like the Americans, you have up until the 15th of April to do your business. So just be cognizant of that, everybody, if you do those RSP plan contribution kind of things. And I don't even know, do they even have that kind of program in Europe and Asia? I'm not even sure. But anyway, welcome to the Frivolity. Alex actually had brought this to my attention, and I apologize, guys. Keep in mind, we're building out the site. Everything is, remember, this is supposed to be the developer cycle, right? Everything's very sort of beta. Hey, Tony, you're in the call. You're in the Hangout, and you're also over there on YouTube page. So you're double fisting this morning, eh? I see over there. You said hello. Anyway, I think Tony actually won a relatively new member to the site. We're collectively all trying to show you the light. So we're having some great conversations in the lounge this morning with Tony, trying to give him some basic guidance. I think it's super important. We should just make reference, all new people to the site. We're at TRI, we're not going to give you specific financial advice. I apologize. I know, you probably want that and you want somebody to tell you what to do, but you have to understand that you especially in this sort of SEC cracking down on crypto, we have to be very, very vigilant here to make sure that you understand that anything that I do specifically in the market, I'll just simply say, look, I'm taking this trade. This is how I'm managing my money. If you'd like to join me and it fits your plan, you're more than welcome. But I'm not, shilling an idea. I just don't do it. And I even put a tweet out to that effect saying I hung up my broker's license years ago and I'm not in the business of giving financial advice. The irony of it all is that I did sort of leave the caveat saying that if there was one thing that I was going to advise the entire world, it's pay off your damn debts, right? And it's like the credit cards, that charge you, like basically usury rates. That's what usually kills people in this world is debt. And also too, what I noticed, which scares me a little bit here, and I suppose this is a nice dovetail to our conversation here this morning, is it appears to me like the debt market has actually rolled over here, and this could get kind of dangerous. I've shown you guys in recent conversations how the bond market broke, i.e., interest rates heading up. In the spring of 1987, interest rates just kept heading up and up and up and up and up. And finally, ironically enough, this is the only thing that people remember of 87, the crash. The true irony of all of this is that actually if we do simple things like 50% rules, we actually see that the crash of 1987 really wasn't a crash. It was actually just a very healthy, normal technical correction of an overdone market. So, are you not going to cooperate with me? Hey, when I fight with TradingView while I'm trying to talk to you guys. So hopefully you guys can see, in 87, this really actually wasn't unhealthy. This is actually what should happen. And unfortunately, what I'm really worried about is, the stock market just keeps bumping its way higher. And people get lulled into this, oh my God, I got to get into the stock market. Everybody's making a fortune, blah, 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 blah. And then boom, all of a sudden out of nowhere, it just does a very normal, natural, healthy technical correction. And of course, the media doesn't understand half of what we talk about here at TRI. So, they paint this as the sky is falling. And the irony of it all is that 50% correction actually set up an absolutely fantastic buy signal. History never repeats itself exactly. Please understand that, right? The cliche that we kick around Twitter is like, history doesn't repeat itself, but it often rhymes. And so what I'm really worried about here is, what caused the stock market to come off there last fall, the end of summer through basically the end of the year. And I would make the argument that the sort of driving force behind this break was basically interest rates. These are bond prices, so interest rates are the inverse. Interest rates just started heading up in earnest, and eventually the stock market goes, oh, Jesus, the cost of business is going up. Our whole model of, what is a healthy PE ratio of the S&P 500 has to be changed given, the actual business environment itself has changed. So when we see this kind of action, and, like we had been sort of talking about this, would, the beginning of March actually end up looking like this top that we saw in the bond market in 87, and big letter of the alphabet just jumped out at us. I don't know. And actually, maybe this is, I won't pick on Colleen anymore. Did we lose Tony? Hey there. Oh, no, I think we lost Tony. Oh, well, maybe I will pick on you. Tony is my target du jour because he's new and he's going to need a lot of help here. But also, if Tony bailed, then Tony, you're over there on YouTube. I don't know. Can you see any letter of the alphabet here that maybe your grade 3 English teacher wanted you to learn? Right? And hopefully everybody, I don't know, Colleen, can you see the M's coming in here? This is dangerous, right? This is extremely dangerous. So anyway, we'll see how it goes. As I said, my sort of number one recommendation to the public is just pay off your debts. Get out of debt. Don't get sucked into this game because the market will just eat you alive. Actually, I did find it interesting. I saw quite a few tweets and stuff about people actually, and I think there was a major department store in the United States that has basically stopped accepting Visa. Because not only is Visa screwing over their customer base, with these insane credit card rates, but it actually turns out that these credit cards charge vendors horrendous fees to use them. So, ironically enough, we have made the argument at TRI and Crypto Enthusiasts that crypto is literally going to replace Visa and all that, those kind of payment plans. Let's get the Lightning Network all filled out and stuff. And, the days of the credit cards, hopefully, maybe if we're really lucky, the days of the credit cards will disappear. Yeah, and Tony also says that they do a lot of chargebacks to vendors. So a lot of vendors are saying to hell with these damn credit cards. Anyway, that's here nor there. Okay, so broader market perspective. Julian did a really good report yesterday talking a little bit about options pins. It's, in my opinion, that Wall Street would prefer to have the stock market just close out nice and politely up here. They gap the market higher on the open, sort of sucking any late sort of retail FOMO buying into the market. But you can see things are just basically parked here. And usually on options expiry day, the market's actually usually pretty quiet. It's usually the day before options expiry day that we do a lot of business. So, kind of sadly, right, they gap the market higher. Any sort of late FOMO buyers are like, oh, man, I got to get long. And they just get bitch slapped. And I would expect the market to end today fairly quietly. I don't really see any reason why that shouldn't happen. And I could probably just quickly show you here. I really like Julian's little site about those option pins, but we should be able to just see this on the S&P here. Of course, that's assuming that we can pull this up. March 1st. Wow, isn't that incredible? Jeez. All right, let's see what we got here. So if we look at the heaviest open interest on the puts, here is today's expiry. The S&P right now, the spider is sitting at 278.54, opened up at 280. No, beg your pardon. That's kind of odd. That must be a delayed quote. 280 and a quarter, bid and offer. But let's go see heaviest open interest on this contract. You can see 280s, there's 21,000 sitting there. So my hunch is they're probably going to finish this thing at like 280.01 or 279.96 or something, just to piss all these people off. 279s and a half, cha-ching, 279s, cha-ching, 278 and a half, cha-ching, 278s, ooh, now we're starting to get into some big numbers, cha-ching, 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 277s, ring that register, 276s, cha-ching, 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 275s, all of this, free money to Wall Street. And the irony of it all is you look above 280 and look at it, there's like no open interest here at all. So they're just laughing. And it's almost a little bit criminal how blatant this is. But, that's the way it goes. Hey, Reza, I sent you the, did you get the volume analysis quiz? As soon as you've done that, I'll just keep spoon feeding you those. We want to get Reza all schooled up here so he can bring his 3 commas script and all that for tomorrow, or shortly on the site. So anyway, okay, so really good sort of analogy of the way the options boys manipulate prices, and don't be shocked if they take the market out right here. And actually, this is a really interesting comment too, because if they actually close this 280 slightly in the money, then that will mean that Wall Street will be obligated to buy this, which actually gives Wall Street a lot of ammunition. They might be sort of reloading their stockpiles so that they have stock too short if they want to drive the market down. So, don't be shocked. I suppose on the call side, they got a little bit of open interest here. These aren't aggressive numbers. You can clearly see they really probably would prefer not to have the market go out above 281 so that they have to honor these. And you can see somebody here, look at all these 50,000 contracts up in this area here. That'll all just be pocketed. So, and also, yeah, so my hunch is they're probably going to just park it somewhere right in here into expiry. So let's keep moving forward here. We had talked to you guys recently about, and look at this. Holy shit. I didn't even realize that this was so. I had put this tweet out yesterday saying, uh-oh. And look at this. The bonds are actually gapping lower. Holy crap. That's brutal. So, Colleen, this is both back and forth. And Tony, now my new target, right? Hopefully you guys can see this M. Ouch, that's ugly. But this is the yields, right? Interest rates. And hopefully everybody can see this W's and then another W. All right. So, and now even this bigger, look at this big honking W that's trying to come in here. Ay, caramba. That's brutal. So be careful, everybody. And like I said, probably, we used to, as financial advisors, we always say, the absolute most important thing is pay off your debts, especially things like credit cards, just brutal. And that's what often kills people. Things like owning a house or a car loan or something like that. Well, you don't really have any choice, in mortgages and stuff. And if anything, what I like to think of as a mortgage is it's almost like a forced savings plan where you're forced to build equity in your house over time. And a lot of people, when they get into retirement, they simply just do reverse mortgages and cash out that equity and use that to pay for their retirement. So it's not, having a house and a mortgage and all that's not really that bad of an idea. But when it comes to things like credit cards and, short-term, loans from the bank and stuff, I don't even use them. So lines of credit, that's what they're called, lines of credits. Those kind of things, I think it's best to just play from a position of strength. Reza worked in the bank, so of course he'd know it. He says, mortgages equals death pledge in old French. Thank you, Reza. Appreciate the lesson. One thing that actually jumped out at me, which I was a little bit surprised at, but I guess it shouldn't shock us, is holy crap, the gold is just coming off here big time. So somebody cue the soundtrack. Dun, 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 dun. And actually, Colleen, you just did the candlesticks module. So, and actually, Grim and I were chatting yesterday and getting you guys ready for that candlesticks module. Can you see the empire here? Did we lose Colleen? I mean, this is extremly advanced trading. Most new people to trading, there's just no way they can take this trade. It's just too anxiety riddled. But extremely powerful signal from the market. And also, too, we've been talking lots about this coming into horizontal support and resistance, reload zones, long-term trend lines, a neckline of a massive potential inverted head and shoulder. So, could we accept above here? And if we did accept above this level, then, oh boy, gold was going to take off. But you can clearly see on first blush, this level is being rejected here. So, the poor old gold bugs. And I think Thomas was in the lounge this morning talking about his silver trade has actually already doubled on him. So way to go, Thomas. You're the man. It shouldn't surprise us. Thomas is very good at his craft. And we always say those that are good are lucky, and those that are lucky are often really good. So I haven't actually looked at the silver in earnest here. Maybe I'll just throw it on here. Let's see what it looks like. But wow, what a signal in gold. And actually, I feel pretty good because I got out of my gold trade. I had one stock that I bought that was sort of my gold proxy, and I just walked away. I made a little bit of money, not too much. So SI1 exclamation mark. And I was really jazzed about sort of like the weekly silver charts. But if anything, what I'm seeing here is, oh boy, wow, look at that silver. Oh, caramba. And let's see, is that actually a double top there? 1620, 1619 and a half. Oh, those sons of bitches. So, and you got to remember, guys, the silver traders, they are notoriously corrupt. They are just the worst actors in the space, and they just criminal the way that they trade the market. But nonetheless, and actually, I don't know. It's interesting how bond prices and gold and silver seem to be in cahoots. But what are we supposed to think, Colleen, if we ever see the market smiling at you? Run! And it's interesting too, given our conversation about the corrupt silver traders, right, on the COMEX. So interesting analogy. Kaboom! So be careful here, gold and silver bugs. And I'm sure Dav probably doesn't like to see this, but nonetheless, it is what it is. If we draw fibs heading back down, we put on sort of our levels. This is interesting, actually. We should see some support come in here, and I would imagine all the late longs and stuff, they're all getting crushed right now. Probably be interesting if we did sort of the math on margin requirements and stuff. Probably lots of long liquidations in here. I think Thomas was saying that, he was going to his gold and silver shows and stuff like that, and he was saying that the public was getting all stupid, ridiculous, bullish. I would say that this thing's got lots of business that's got to be sort of taken care of here. We've got this cheeky little gap right there. There's also a cheeky gap right there. And then there's even bigger gaps down here and a huge monstrous gap right here. And of course, there's our good old 78.6 line in the sand. And probably if we draw a trend line off of these lows, that'll probably correspond with that level. Actually, no. So that trend line comes in, probably key support around 61.8 Mountain Man. So anyway, you shake it. We got no business buying silver here right now at all. Probably too big for us to actually trade this top, considering there's our 50% target level. The options guys, if they can sneak in on TRI SOFs and stuff, they're probably actually cheering. And if I'm not mistaken, I think Thomas even was in the lounge. I don't know, there was late yesterday or early this morning saying his options have doubled on him. So I wouldn't be surprised if a lot of the pros are actually taking some profits into this event. Kind of a sad commentary for the gold bugs, but a really good lesson in don't chase. If you're going to be a buyer, you should have been a buyer down here, not way up here. All right. Anything else we should talk about? For the Empire on the gold, I really like how Grim sort of got me using the bot trade levels on setups, and it's interesting how the 25 level basically corresponded with that Empire level. Really like too, kind of we saw this on Bitcoin recently, where you get these sort of lines in the sand. I don't know whether you guys can see this or not, but there's the Empire. This is an inside bar. So Colleen, I hope you can see that now. So if the market had actually accepted back above this high, then that would have actually been a buy signal. And then here's an inside bar fail. And notice how the inside bar fail was right off that damn bot entry level. So I think that the trade was right there. And if that's the case, then, you have your stop against the top of the Empire. And hopefully you see we've hit move stop to scratch level now on this trade. This would be the point at which you want to start locking in profits, trailing stops, using market structure, moving averages, those kind of things. And ultimately the target, and I think we've been talking about this for probably about, I don't know, maybe a good couple weeks, that 1258 area sure looks like probably, short-term support for the gold. We might dip down into 61.8, kind of like that silver. which happens to correspond with this gap down in here. And just like the silver, right? Lots of gaps to the downside. So don't be shocked, people, if we see the market just lose its lunch in here. But long and short of it, anybody who had taken that short Empire and stuff, at the absolute worst, you should walk away at scratch. Okay, so Alex is telling me that time is running out here. I don't think there was anything else in particular that I wanted to talk to you guys about in stock market land. Obviously, lots of big goings-ons. I don't really have a short setup per se working on the stock market just yet, but I've talked to you guys about this before. The first M sort of stops the big up inertia, and it will be the second M that comes in on RSI studies that actually gets me thinking actually short. I will make reference, and actually I really like this. It's so sexy. Sjord has been working away on the breadth indicators and just, feverishly. He had today as a target to get something in our hands. You can see that he's filling it out, just looking sexy as hell. It is interesting how we got just one hell of a buy signal back at the end of December, right on that pivot in the stock market. So the breadth indicators had us thinking long coming out of that dump into the Christmas lows there. Perfect. And it's interesting how breadth indicators have actually started. They actually flashed a sell signal here back in early January. So in essence, we have a situation now where the market's slightly disconnected. And really, and it kind of makes sense because, Zach and I are hunting TRI SOFs. We don't see anything on the bigger stocks right now. We've had to drill down to like all the very old in the tooth. And we've talked a little bit about on the S&Ps how, yes, we have location. Yes, we have divergences, but we're just waiting. I was really interested this morning, especially for the level twos, and is Mr. 13 Friends here? He is. Mr. 13 Friends and I have been chatting a little bit about the DI and algo signals. Oops. All right. Well, that's different. Is that my browser? Or, okay, are you going to come back on this? Okay. Maybe Mr. DI doesn't want us to talk about Mr. DI today. Yeah, that kind of sucks. Well, let's see if I refresh this, will it come back? And I might have actually taxed the system just too much here. I thought, oh, yeah, look at that. Son of a bitch. So the level tours, they are coming up the manual class that we're just winding up. They're in their week 11, learning about scripting languages and writing scripts. And I thought it was so cool. I've been watching this DI like a hawk. I still think that it's better to run this DI off of US dollar-based assets because another site member who's in the level 2 program was building scripts, and he was running, thing like off of MEX, which uses, coins versus other coins, ETH versus Bitcoin and stuff. And I just noticed those signals are extremely choppy. But when I follow them off of US dollar-based assets, I get little cleaner signals. And I thought it was just really interesting that the DI spat up a buy signal here on Bitcoin this morning. And you can see that trade's just working away really nicely. Okay, so Alex says we had sort of made a plan that halfway through this daily brief, we'd hop over to viewer requests and spend the latter half of today just talking to the audience about your requests that you had made and taking the opportunity through this Friday session where we don't have any of the commentators on the show, just taking the latter half of this broadcast to talk specifically to you guys about your requests. So with that said, probably best that we pull up. Let's see. Why don't we go over here? How am I going to do this?
It's in the chat. It's in the chat there. the link.
Yeah. So the question is, what I'll do is I'll just do sort of a daily, weekly screen here. And I'll just give you my 2 cents of what I see. Of course, remember, no guarantees from the management. And all it is my opinion. And of course, you guys know what Brian thinks of people's opinions. So I'll do my best. And let's see how we're going to do this. We'll go open a new window. Hopefully this will load. And we'll go along here. And then we will go down here. All right. So how far up do I have to scroll?
I marked it. It should be around February 15th, I guess.
Wow. Was it really that long ago? Oh, boy.
Yeah, but that's the lounge now, sir. That's the lounge.
Yeah. Sorry about that. Which room do you want me in?
Just click on the link that I posted in the group chat.
Yeah, I did that. But what ends up happening is it sends you to the lounge. It doesn't sort of direct.
If you go back to the general...
Is it the show requests?
Yeah.
Okay, 17th, 16th, 15th. Okay. Hey, Sonny! I haven't seen Sonny in a while. Okay, first off, I have a question. In the midst of last BTC peak, I invested BTC to gold on Vaultero. The value has stayed the same, even slightly went up. The price BTC-wise has gone 10x. Yeah. Would it be wiser to keep this as a backup in my portfolio, or as I'm thinking now, switch to BTC when the clear oh, okay. So, Sonny, you've established that we have bottomed. Okay. When a clear bottom has established itself and we see prices changing again. This will give me 10x in BTC plus profit in fiat once BTC goes up. Any thoughts? Well, you know, that's a $64,000 question. Has Bitcoin bottomed? Frankly speaking, I don't know the answer to that. It is interesting to see how gold itself has come off. I think I have that on a screen here. The question is, which one is it? Which one is it? No, not that one. Not that one. Not that one. Here we are. So really, Sonny, you're probably asking about this question. So back at the end of 2017, 2018, and I'm right there with you. We went and bought a whack of the gold on Vaultero to sort of, you know, hedge. And the value of it has stayed relatively the same, and it's looking pretty toppy here. So really, I might suggest, Sonny, that you do your analysis off of this screen, and this happens to be the gold price versus Bitcoin's cash market. And really, your answer, and you're a pretty smart guy, you should know this. Your answer is really going to be a conversation about this. Now, me personally, I just like to have my risk spread out, and I didn't really expect to have like a capital gain on this gold position. It was just simply a place to park money. So, you know, is this a question of gold comes back down, but Bitcoin doesn't do anything? And we see this value come down? Or is this a question of, does gold come down and Bitcoin goes up? Or is this a question of a combination of the both? Frankly speaking, I don't know the answer to that. What I would say, though, is it wouldn't surprise me one bit if we see good old things like 38.2s and reload zones and all that fun conversation. So I wouldn't be surprised if this proxy has to come back down to these levels. So, you know, I don't know whether this is really a tradable setup up here. That's a tough conversation unto itself. I don't think I really want to do anything because I just simply want to keep it there, just parked, and it's a hedge for us. But you should make your own decision based off of this chart, Sonny. So my answer specifically to you is, you know, you're a pretty smart guy. Look at this chart and trade accordingly. Sonny 91, there you go. So that's my answer to you. What does your plan say about this. Maybe you sell them, take some profits, and park them back into BTC and let this thing settle down to go and trade this. But if it's just a pure hedge and you don't really want to second guess this, you just want to make sure that your eggs are spread out appropriately, well, then maybe just leave it alone. Okay. Did I miss one? Kevin's saying that I think not. New request starts here. Yes, that was that. Oh, okay, sorry. NVIDIA, September 20, 200 calls. Okay. We did have a TRI SOF on NVIDIA a while ago. So actually, this should make it fairly easy for me to answer this. Where the hell was that? Way over here. By all means, you should, because I remember we were looking at this down here off of this W. If you did buy the calls and were interested in this trade, I think we even, if you bought this trade, which is what this was all about, you should have gotten yourself a double on this move, and you'd be in a free position. And the risk-free trade, just let your money work. That's the way I like to approach these SOFs. Sometimes these markets will just take off, and that free position will turn into just ridiculous gains. There was one recently, I can't remember just off the top of my head, that it just kept going and going and going, and really your best bet was just to leave the free position alone. Market did dip back down into this window here, and on this event, we talked a little bit about this bad boy here. This request was made around the 15th or so, somewhere in this area. I don't think so. I really am not interested up here. So, if you're looking at it now and really, yes, the market's moved up, but really floundery-ish. Ironically enough, if you are interested in the asset right now, you got to draw your reload zones. And what a coincidence. The reload zone really hasn't changed a heck of a lot here. And that's often what happens with these reload zones. So I would be saying the same thing. Just can we get a dip down below value? I don't know whether there's any gaps. Sen is saying that there's some gaps down in here. There's a gap off of this bar here. So I would be targeting down in this area here. My knee-jerk reaction is I think this trade is come and gone. And I think you should be on a free position now. And maybe we're going to the well too many times here. Zach and I, when we built out our little plan, we just simply have an express goal. We're going to try and, if we can buy 3 contracts, we're going to try and sell 2/3 at a double, which generates a nice 20-30% return on the trade itself. And we have that free position. If you buy 4, maybe sell 3 at that double, get yourself a nice, 30-40% return on the trade, and you've got that free position. So that's the way that I would be approaching it. I'm a little worried that if this thing does have to dip back down into here, it's meaning that this thing's pretty heavy and it just can't get any traction. And we might just roll over really hard and just break really hard. So I don't know whether I would be really thinking about going to the well again here. And then also, too, recently we've had lots of conversations about the SOX index and how it's actually looking extremely toppy now, which in itself is a bit worrisome. So I don't know. I think that the opportunity for the long side trade is come and gone. Here's this. This is the SOX, isn't it? Yeah. Here's the SOX right now. We've done that dead cat bounce. We've rallied into reload zones. We're up against trend lines right now. Do we really want to be thinking about getting too long of the semiconductors in here? And I think the answer is no. I think you got to let this thing settle down. Maybe start painting W's to set up bots. Okay. But that might take a month or 2 to develop. So I hope that helps with that question. It's a good question, and I apologize I wasn't able to answer it in a more timely fashion. But my knee-jerk reaction is I think that trade's getting a little bit old. Okay, Alicia says, could you look at GIN BTC? Gin coin is only sold on Crypto Bridge after the Cryptopia hack. Oh boy. Does anybody have a site that I can load Crypto Bridge up on? I haven't got a clue where to look at that. Okay. Coin market cap is the only place we can look at this. Does Coinigy follow Crypto Bridge? Does anybody know off the top of their head? No, they don't. Well, you know, I mean, if Coinigy doesn't even follow this exchange, that's got to be a bit of a warning sign. Because, you know, Coinigy is very lenient. And if Coinigy thinks that they're troublesome, oh boy. So here is this Bridge coin. It's not quite the same thing. What the hell language am I looking at here? What happened there? Not quite sure how I got to German. I think a German must have posted that link for me. Thank you, guys. 67 cents, 5.4 million out. That's a nice friendly number. Market cap of $3.6 million, though. Wow, that's pretty steep. Basically on its knees. So, you know, caveat emptor, buyer beware. Since we can't really chart it too well. Oh, what is Brian? You got maybe a chart we can look at? Coin Trader. Let's see what you got here. Coin Trader Pro. Ooh, all right, we're real pros. Yeah. Oh boy, this looks bothersome. Man, sure is a lot of volume in here. Somebody's doing something. It looks to me like if you were nanny nibbling down in here and maybe buying setups off of these levels, that actually this was your trade, right? Because that's like 0.000000000002. And it got up to 0.04. What a coincidence. So in essence, there's your double. Ding, 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 ding. Ring that bloody register. And we probably, what do you think the odds are that these wicks were right into a reload short zone? I bet you pretty high. Let's see. Okay, this site, at least they got 78.6 correct, but I do see that this study's backwards. And a warning to you guys all, don't put extensions and retracement levels on the same study. It's just going to fuck with your head. So, you know, their default is set up this way, but I wouldn't recommend doing this. They should be two completely different studies. So, you know, the question here was, you know, what do I think? I think that they rallied the market into a reload short zone. And people that bought this up here back in December, they were just like, oh, thank God, just get me the hell out of there. You can just imagine all the guys that were like, oh, I was told this thing was going to be great. Oh, we're all going to get rich. And oh, no. Now I'm sleeping in the garage. I can't even sleep on the couch. The wife's kicked me out to the garage. I just spent all our vacation money on this coin because it was going to get me rich. And oh, boy. So this was that opportunity for that guy to stop sleeping on the couch, right? He got all his money back. Thank God, get me the hell out of there. And then, of course, as we talked about just a moment ago, my hunch is this was probably a nice little reload long zone, but extremely dangerous stuff here, guys. Yeah, so you can see that right there was a little buying window right there for the pros. Probably a little too advanced for our noobs. If anything, if I was going to be like, yeah, this is a great idea, what I would have liked to have seen is the market just politely put in a W. So, all right, we know that the market's a bull, then come back down, test the breakout, and turn back up. And ideally, we'd love for this to line up where you have reload zones line up off a previous market structure, right? And think 3 reasons for a trade, all that kind of conversation. right? And look at that. I'm getting good at this. I totally eyeballed that, eh? That would be oh geez, I don't know where the hell it is. Mountain Man level, but who knows where the hell the M is on this. So right here, this looks like Chop Vegas. They took out these lows, so a little disappointing here. There doesn't seem to be a heck of a lot of traction here. So at the very best, I suppose you could have said, well, Brian, I see this W, so I went and bought reload zones. The only problem is that this just went too far too fast. If anything, what I would say is if you did buy this reversal down in here, which is a pretty little reversal, you should be in a free position now. And if anything, this is an absolute number one reason why in crypto you have to have open orders working at your sell half on a double level. You just don't have any choice. And now, unfortunately, it looks like they're screwing with the noobs' heads. If this thing can go in W here, right, nice and politely, okay, we might have something. But you got to wait for it. Wait for it. Wait for it. Wait for it. Right now, a little bit difficult. I suppose you could argue, I don't really like the fact that it's not really listed too many places. You can see how Nanny nibbles. Hey, Brian, Nanny nibbled off of this level. Oh, fuck me. Brian, and Nanny nibbled off of this level. Fuck me. Right? So, this is why if you're going to Nanny nibble, maybe just, like I think Dav tells his community to put like 0.25% of his portfolio into an idea. And then that way, if you are nanny nibbling, you just, keep nanny nibbling here and just keep bringing your average cost down. And of course, even if you did like 1% at this point here, you'd be 3%. So you still really wouldn't be breaking Brian's 5% rule. But had I done these nanny nibbles and I was in 3, I think I would just, okay, enough's enough. Now we got to start seeing some performance. So that would be my comment there. So I hope that helps. Okay, let's see. Next one, Tom, could you look at XLM USDT? All right, XLM USDT. Where should we do this, I wonder? I guess we just, well, I thought I put up a screen here. I think I looked at this on the Broiler Chicken show on the weekend, didn't I? Seem to remember oh no, that was XRP, wasn't it? Okay, so where the hell is this? I thought I did a chart. Well, maybe it was like that. Yeah, there we go. Sorry, guys, wasting your time. Okay, so XLM USDT. I would prefer that we actually look at this versus like the US dollar, because keep in mind when you do USDT, you're playing with the vulgarities of Tether. Tether's up and down like a horse drawers, just like all other cryptos. Yes, technically it is a stable coin, but it has lots of volatility unto itself. So just to give you a nice clean look, I'll look at it versus US dollars themselves. All right, let's see what we got here. Off the higher time frames, we're definitely in a buying window. You can see we've actually come back down and tested the original breakout level from years ago. Internally, Willie's nice and stupid, and this is a weekly chart. What's the daily chart look like? Daily, we were stupid down here, and hopefully everybody can see, we probably had, off the dailies, not a bad little turn down in here. The real pros on the TRI site probably hunting RLZs down in here, right? You can see reload zone, the pivot, nice little doji candle, fractals, all that kind of conversation. You might have drilled down to like a 4-hour to trade, hunt a double bottom. Willie was stupid, bullish divergence working. So I can see the trade here. Big rally up, of course, and I don't know whether this was a double or not. No, not even close. So this trade's still sort of working away. Nasty down bar candle here sort of stopped the bull run in its tracks. Sort of sitting middle of the road now, momentum-wise. Not really anything bullish, not really anything bearish. Bulls were in control. Bulls haven't fallen asleep just yet, but looking a little suspicious. If you were interested in getting in on this thing as a trade and you want to sort of take a stab, notice reload zones happen to line up nicely with previous market structure. It would be kind of cool if there was some gaps or something to frame your trade. Let's see if we drill down to a lower time frame. You can see, oh, look at that juicy gap right in there, right? There's a nice little gap right in there. Sen's telling us there's gaps in here, I guess, off of that level. So that stab into that level was probably an attempt to try and fill that gap in. You know, like I said, off the daily charts, man, kind of wishy-washy signal. Nothing really too solid here. We just made a new low on this thing. So, you know, you know, if I was going to be a buyer here, I think I'd just throw my stink bid in right off of that gap right there. See if you could get lucky and get a nice little stinky bid. Phil, I don't see too many other gaps. Looks like everything else has been cleaned up. So, yeah, not a bad level there. So, whoever asked about this, that's probably the area where I'll just say, if I was gonna buy, here is where I would buy. And we'll throw that on there. And my hunch is, though, well, I don't know. That's a tough one. You know, maybe work a couple bids, right? One into this notch, gap, the original market structure bottom, and then throw in just a stinky stink bid down again below value. And if you happen to get a nice little dump on this thing down into those levels, take advantage of that. You know, if you're trading this, we break these lows, you better walk away. You just don't really have any choice. But if you're nanny nibbling this, I don't have a problem with that trade. That's not bad. But, you know, like I said, I think I would be working my bids off of this level right down in here. So Tom L. How do I do that? Tom L, we'll go reply and go, boom. What time is it? I got 7 minutes. Okay, next. Loom BTC, kindly Mr. B. Let's see what we got here. Loom. Okay, well, there's always a question of where the hell we're going to trade this thing. Probably not a bad idea to look at it versus, you know, US dollars. At least that way you get sort of a solid floor. This thing looks like it's a little too far away. Yeah, okay. So, you know, if anything, I like this. Nice floor established all through the past quarter. You know, there's a guy, Trader Stewie, that I like to follow. He would call this a J-Lo booty bottom. Nice wide double bottom. You know, flashing little buy signals up top here. I think, you know, the traders probably were really focusing in on this area down in here. If we move the chart over, actually, oh yeah, that's a higher high there. Yeah, so you can see somebody doesn't want this thing to come down below here. You can see when the price actually gets down to this level, you can see there's just not that much interest in either buyers or sellers down here. So I think your bottom looks to be right in this area right in here. And if anything, this is a really, really good analogy of reload zones. And, you know, you want to wait for the market to come back down into reload zones and start painting W's. So, you know, if I was going to be a buyer, this is definitely the area where I'd be interested in. Interesting how they, looks like there's a little bit of a gap that's been left open there. That gap looks like it's been filled in. So there's a cheeky little gap right down in here. Don't think I could justify, you know, trading this thing at this level here. That doesn't make sense to me at all. But, you know, nanny nibbles. Could a nanny head on in there and take a little nibble at this level? Sure. It's not a terrible idea. The traders got a trade. I think your trade level was right down in here. And, of course, if you miss this, then I think you're just going to have to draw your fibs wherever the ultimate high is. And, really, we could just go right back against the original low. And you notice the reload zone just so happens to be basically overlapping the old reload zone. So, and I always like to talk about this whenever I get overlapping reload zones, super sexy. So if I was going to work a bit, it would probably be somewhere down in here. Maybe even, if we change this to a line chart, you'll probably see it a little better. Colleen, can you see the W's? Where's Colleen? She here? Colleen, where are you? Have you fallen asleep? Can you see the W's? So actually, say, well, Beamish says, yeah, try and buy around W levels, right? So, working bids down in this area here. Good old Kavarkanator levels. I don't have a problem with that. But buying up here, no, I don't like that at all. All right. What's next? So we'll say Beamer's buying zone, something like that. And we will Crypto Odyssey. Actually, Crypto Odyssey is usually here. Where's his cool little avatar? Anyway, hope that helps. Oh, that was the 19th. Oh, sorry, Crypto Odyssey. Jeez, I'm so. We should. I think, Alex, we should really try and at least once a week try and clean this stuff up, because that's not really fair to this guy to leave him hanging there for so long. Sorry, dude. Not intentional. Hello, I'm attempting to swap my tethers for USD coin, USDC coin, and then to cash. Oh, good luck. Good news is that Coinbase offers a peg 1-to-1 USDC versus USD pair. Oh, that's interesting. And with the click of a button, your USDC is swapped instantly to USD. Okay, that's cool. But first, I would need to sell my tethers at Binance without losing my shirt. Oh boy, good luck. Would love your take on USDC versus USDT pair. Can TA be used with a history as short as this? Will I ever get my fill? Thank you. Well, yes, because all technical analysis is just simply an expression of our sort of collective human perception of value of any asset. That's all technical analysis is. Didn't we skip a couple? Did I? Oh, fudge. Oh, I did. Damn it. Oh, sorry. So, just quickly answer. Oh, okay. Well, we'll see if we can come to that. I got to wind this up in the next couple minutes. Oh, darn it. So maybe what I'll do is maybe on the broiler chicken show, I'll ask a few more of these. Okay, so Jesse R., we already talked about that. So hopefully I gave you, so answered. So we dealt with him. The only ones that were sort of missing are, well, we'll see if we can go this.
Dreamful, I guess, is the next one.
Yeah, I know. I'm sorry. I would like to get your take on the overall economy of Europe, the UK versus the rest of EU, etc., and the shrinking of middle class globally. Well, yeah. I mean, I would make the argument that we're probably heading back towards sort of Dickensonian. I don't know whether you guys know Dickens. He wrote Scrooge, right? Everybody knows Christmas Carol. And I would actually make an argument with the collapse of the Soviet Union and the end of socialism, that the pendulum is sort of swinging back towards that direction. And I think you could make an easy argument. People like Bezos and Zuckerberg, or whatever the hell that guy's name is, and Gates and all those kind of people, you can see that the divide between the rich and the poor is just getting wider and wider and wider and wider. Middle class, I think, if you're a professional, lawyer, doctor, whatever, accountant, I think on balance you should do okay. Do we live in a inflationary world? Ironically enough, we just went through deflation, but they sort of injected inflation into the picture through the devaluing of these currencies. So everybody's standard of living is going down, which is so sad, which of course exacerbates this sort of divide between the rich and the poor. So on balance, I worry for Europe because Mr. Trump has got a major hard-on hate for Europe. I think he absolutely detests Miss Merkel. and the Germans. And I think he absolutely hates the fact that the German auto manufacturers are just totally taking advantage of the Eurozone and the weak euro currency to dump product on the American market. And it's almost laughable, right? When I go out into Vancouver, the cars are either BMWs or Audis or Mercedes-Benz or Volkswagens. I mean, it's quite remarkable how well they've done through this whole period. So that's a bit of ebb and flow. I don't know domestically how things are going because, frankly, I'm not on the ground in Europe. I did notice when I was in Europe last summer, it really felt like people were living way, way, way beyond their means. Everybody had a new car. Everybody was feeling rich. We were all eating avocado toast and being vegan and paying just absolutely ridiculous prices for food and entertainment. Yeah, but the problem here is that those hipsters, they don't know what depression is like. And if anything, my feeling is we're very, very close to the economy's rolling over. You know, the irony of it all is the longer and longer this situation goes with Mr. Trump, we're actually getting closer and closer and closer to actually potential martial law in the United States when the economy breaks. I saw lots in sort of internal commentary about how Mr. Trump is trying to bring the military back to the United States. And now there's actual talk of him declaring martial law in cities like Chicago, which gets really scary. I mean, this whole situation might deteriorate really, really badly. And unfortunately, you know, Europe is caught in a really odd situation in that they've got, you know, the big bad wolf just sitting on their doorstep over on the east. And they're trying desperately to try and, you know, rein in budgets of the Southern European countries that have notoriously taken advantage of the financial system to live way, way, way beyond their means. So ironically enough, I actually make the argument that we could very easily head into a couple decades of just absolute chaos in the global scene. It wouldn't surprise me. I mean, remember, Japan lived basically a couple decades. They call it now the lost decades. And this new millennial generation hasn't lived through bad economic times. They don't even know what bad economic times look like. And if it's one thing I'm absolutely certain of is after a while, you know, and if anything, Mr. 13 Friends, your job might get quite a bit more difficult, but try and hold on to that damn job. We might actually get into a situation where jobs are actually, you know, few and far between. The good part about for you guys is you're all, most of you are fairly intellectually minded, and you have skill sets that are in high demand. But you know, people that don't have high skill sets, this is actually an extremely dangerous time. And at some point, this economy will roll over, and all hell will break loose. It's just a question of when, you know. And seeing what I see out of the interest rate market right now, it worries me that the clock is ticking. Right. So anyway, only time will tell. So I don't know whether that helps you or not, but, you know, would I be going full bore, full into equity assets right now and those in Europe right now? I think that's extremely dangerous. What I'm really worried about here is that to actually cause that sort of 87 crash scenario, which of course led to a recession on the other side of that, is we actually have to see the market melt up first. And that scares me immensely. And unfortunately, I think what might end up happening is, you know, we're going to have a big, you know, like, no offense, Tony, you are new to the site, so you don't really, you know, you don't quite understand how we operate here. But Tony's a really good proxy on sort of the public. And you know, he's even talking about, maybe should I just go fucking full bore and just buy all the Bitcoins now? And it's just like, oh boy, go slowly, man, go slowly. So, you know, that's sort of my commentary about the whole globe right now. It's extremely dangerous world we're living in, and the clock is ticking. So tick, tick, tick. ARWR, and then I think we better call it a day. Yeah, and I'll try and Big Rooster. Maybe I'll even try and do this through the Broiler Chicken Show on the weekend, and I'll see if I can clean up the rest of these requests into the weekend. Somebody's asking about ES and NQ. So we've talked lots about that on a daily basis with Thomas. I think you should have a pretty good idea of what we're thinking about in the stock market. Yeah, okay. So Bob T, probably best for, you know, maybe the next time Julian's on the site, we'll highlight this question. And keep in mind, Sjord is slowly working away, adding tools, developer cycle, all that kind of talk. So maybe Alex, you can remind me next Thursday to ask Bob T about that. Yeah. Okay. Thanks, man. Okay. So we dealt with that. We dealt with that. We dealt with that. Somebody's asking, oh, those AutoNation calls. Yeah. Hey, interesting trade, but I think we got to let the stock market calm down a little bit. But that AutoNation, Zach, did that option double? I think it did. So that call that we had, or the pick that we had about a month or so ago on AutoNation, that trade's come and gone. So. Okay, I think I'm going to leave it at that. Crypto Odyssey, if you really need an answer on this geo, just give me a holler, and I'll help you on the site. Okay, so I got to get off and get ready and Crypto Odyssey. Oh no, and Chuck. I'm not even quite sure. I said I was going to look at this, so let's just quickly look at this, and then we'll call it a day. ARWR. Hell, maybe it's a buy. Who knows? ARWR stock. Arrowhead Pharmaceuticals. Holy shit. Oh, Jesus. Well, you asked on the 17th of February. So that's right here. I don't think I could have justified buying on the 17th. Oh, isn't that weird? I guess you must have asked on a weekend. So the best you could have done was the 19th there. So that's that bar there. Maybe you asked on that Friday. Looking at now, keep in mind pharma stocks. Pharma stocks are cheeky, right? Because technically they don't really have earnings. You know, this thing might. And really, they build a drug. And if the drug rocks and rolls, then, you know, awesome. They do really well. But quite often, these companies don't have earnings. And so it's extremely dangerous if the drug doesn't perform. Looking at the chart, I think I see sort of head and shoulders-y type action here. It's a little bit tilted, so, you know, is that a commentary on the accuracy of the head and shoulders? It could be. You know, I don't know whether that's the neckline there. Anyway, you shake it. Clearly, this was a breakout right in here. And I'm not really a fan of trading the head and shoulders because, you know, as you can clearly see, a lot of risk for the potential reward taken. It's basically just a one-to-one in my opinion. I do see lots of people that will take this. And of course, you know, and I think on yesterday's Daily Brief, we even talked about this. What is this bar here that breaks out through the neckline of this head and shoulders? What does this kind of look like? Does anybody know what this candle is? Yeah, I know I asked you guys this in recent. So... key reversal, very good. Well, I'm looking for key reversal. Why? Because not only did it engulf this bar, but in this case, it engulfed this bar, this bar, this bar. All of these bars, massive key reversal, engulfing bar. Well, that doesn't matter. I mean, a key reversal is a key reversal is a key reversal. So, sorry, Colleen, don't mean to be flip, but, you know, the time frame isn't that important. The most important thing for the key reversal is it engulfs the two previous candles. So, you know, head and shoulders kind of thinking. Does it make sense why the stock went up to where it did here? I think so. And then, of course, you know, the irony of it all is if you actually wanted to short this thing or sell this thing, gee whiz. And so this is what I really need for you to learn, Colleen. Can you see how the head and shoulders, and we could even paint like AB equals CDs, does nothing more than just take us. And I really needed you to take away from the fib tutorial this, Colleen, so I really hope you learn this, is, you know, head and shoulders, AB equals CDs. This looks exactly like the head and shoulders that I showed you on the gold market in that lecture module. But in essence, those bullish chart patterns actually take us up into a shorting window. So often the question is, okay, the asset, stock, crypto, whatever, commodity is down here. How on earth do they get the price up into the reload zone to actually short it where they want to be short up here? And the answer is they often paint bullish price patterns, maybe off lower time frames, to push the asset up into these shorting windows. Now, as I said just a moment ago, pharma stocks, maybe they've come out and they've reinvented a new drug that's going to change the world. I don't know. I would say that if you traded this head and shoulders, this Q reversal, you really should be taking profits. This AB equals CD, you should be taking profits on that trade. Can I justify buying up here? No way. Could this thing go higher? Yeah, I mean, market can do any old damn thing it wants. And I suppose, you know, we could even from a longer term perspective, even be thinking about things like bot setups, right? So if we go bot setup, did it go 33? Did it go beyond 66? Right in that window. Did it set up 3 lows? 1 low, 2 lows, key reversal low? Well, you know, maybe. And then if we apply the bot levels, we're right there. There you go, bot trade, a bot trade. There we are. Oh, look at that. So the key reversal level, and remember, engulfing bar, the buy signal is actually 1 tick higher than the actual bar itself. So ironically enough, the key reversal head and shoulders breakout was actually a bot trade level. What a coincidence. So if you're in this bot, and it's a big one, it's a big bot. Oh, geez, look how big it is. All the way out there. My hunch is we're coming up on probably move stop to scratch levels. And usually this is what happens with the bot is as we sort of race up into reload zones. You know, I think I've told you guys this before. Usually what would end up happening when I was at my prop firm is Mountain Man would hit his level and Brian would be sitting there along his bot and we'd just be sitting in the lounge. Mountain short, and in this case, Brian's long, and Brian's looking at Mountain going, looks like you're wrong, sucker. And then the thing goes, whoop. So anyway, the point of the matter here is this is very cliche what I see happening here. You know, in essence, a test of these highs, botters should move stop to scratch. So if this thing does crap out off of this, then they just walk away. And ultimately your target's way up here. But could I justify going in and buying it here? No fucking way. And if anything, because it hasn't hit the move stop to scratch level, we can still, if this thing does pull back here and start painting W's again, you can still entertain the idea of getting in off of that bot. It's still, the trade entry, in my opinion, is still accurate. And really all that would mean is just coming back down, testing the POC, and the market saying, no, we're happy with this being the point of control and we're all long, so we don't want it to go down, and we're going to accept our way out of there. But can I justify actually buying right there? And you made your request right there. So could I even justify buying on this action right here? And the answer for a guy like me is no, I can't. Okay, so I hope that helps. We'll post that also. Where was that? That was this guy, Chuck. So I've gone overtime now. So I hope, so we'll say higher time frame bots working too late to be a buyer even when you asked. Need palm now if looking to enter, but IMO, you are too late. Boom. Okay, I think we'll leave it at that for today, guys. Hope you enjoyed the offering. Went a little bit over time. I do have a class that I have to go and teach now, so I'm going to leave it at that. Mr. Mayor, what do you think? Did I do a half-decent job today?
Sure, sir.
All right, cool. Have yourselves a great afternoon, evening, wherever you are in the world. And Riza, we should probably touch base. Make sure that you have all the quizzes and stuff ready to go and get you set up for tomorrow. Other than that, have yourselves a great idea. All the best, and bye for now.